Good morning, everyone, and welcome to the European crossover webinar. And we've finally seen some volatility come up in the indices, which we saw yesterday with a more pronounced break in Nasdaq than we actually saw in the S&Ps. You can see here, taking a look at both of these on a 2-hour chart, we saw a bigger break here in the Nasdaq. We did come down to that 14,783, which ended up holding, and then we saw it bounce, and we're relatively quiet here ahead of FOMC day, and really that's going to be the key. Once we get past the FOMC day, do we start to break above higher? And if we do, then that opens the door for us to just move right back up. Or do we finally start to go in and break lower here? And that door is certainly open. I'm not sure how much further this thing could go and move higher. If we could actually make a sustained move, that I would find pretty hard to do. This is going to be some pretty key resistance here at 15,003, even on the profile chart. Can we bounce above that? Yeah, possibly so. I think right in here, 15,050, if you look coming across the board here, may just be about as good as it can get. Maybe might push a little bit above it, but overall in that area, I think is going to be the extent of a push. If we could get that much, I think that you'd see people willing to go and sell into that, but we shall see. You never know. S&Ps, same thing here. We saw a nice rebound. We had 43.72 as our support, if you remember, a bias chart support. They got down to 43.68, and I think we may have had 43.89 and then 72, but 72 was our secondary support level there. We did bounce back, and the market is staying relatively quiet ahead of FOMC at this point. And FX is probably going to be relatively quiet. Let's take a quick look there. Yeah, not much change, and no changes really in the analysis for FX, although we'll take a look at it. Changes back to the day. And we moved a little bit above 18. Well, that's not really of any real significance that we closed above there. I guess they did make it up to 1830, about 1840. So I guess that was something to say, but we just closed at 1815 as we had listed, which is 1850. 1875 is actually the true marker up in here. You can see that if you look across here, I guess it made it right up to that level, which was going to be right at 1836, 37. And there was a little level there. But like I said, the real rubber meets the road at 1875, where you can really see a much bigger move. And then with cable, did extend its gains, so give it some credit there. Remember, we had our bias chart resistance at 38.90. What was the resistance here? I mean, the high for the day was 38.96, so not bad. Although it didn't push, pull back much further, but that's our resistance was 38.90 for the day. And as we take a look at Aussie continues to languish near its lows, with dollar yen tad bit weaker. We're coming off those lows. We did push lower yesterday. Down to 957. Wow. So that was a little bit of a push there. And then taking a look at the cash dollar index, a little bit of a dip, not too far. I think our support was 92.42 with 92.14. So somewhere in between that is where we found some support here. Taking a look at today, what we have, we did get German import prices. That came in a couple hours ago at 1.6%. They're looking for 1.5. Italian Business Confidence Index came in. Surprising that that's not late. Usually comes in much later. But it came in at 115.7. They're looking for 115.4. So a little bit on the better side of that. And then as we come into the States, we do get retail inventories that will be out. And I'm seeing the Nasdaq at the moment push a little bit higher here. And we do get Canadian CPI. So CPI data out of Canada, be key piece of data for does it trade the dollar CAD or the Canadian pairs. And then we do get crude oil inventories. So that'll be a mover today. Crude's been kind of relegated to a range of essentially 71 to 72 and a half. You can see that right there. Clears a bell. So let's go and move into the analysis. I don't think there's any changes with FX at all. So we'll go and pull up the bias chart. Well, as I said, we did move up a little bit higher, but really there's not been any change. We've just been sitting here around the 118 level, and nothing has changed here. Once again, it's going to be 1748, 1875. Until it gets above or below that, we're just basically range trading. Yeah, they pushed a little bit higher on the 1830, but 36, but really nothing's changed. We closed, a bit above 18, which once again, like I said, you would think this. We were looking at a 15-minute chart the way this thing looks. It's just has not been going anywhere. So no changes there. Let's go and move into the cable. Cable, as I told you, we had 38.90. The high for the day was 38.96. And we had 37.45. The low for the day yesterday was 37.66. So not bad on the ranges there. Take a look what we said with cable. Once again, everything's going to be a determiner based on what happens out of the FOMC. But if we do go on and push higher, how much further can we go? Well, if the dollar comes under pressure, here's that first resistance here that's coming in at cable. It's going to be 39.60. You can see coming across the closes. I like to put my resistance and support across the bodies, whether it's a daily body or a 2-hour, but that's where I see it as next area. If they do go on and push and the dollar comes up, comes under pressure, that would come in right there at 39.60. And as far as support, it's a little bit too close. It's going to go right there at 37.78. Moving on to the Aussie dollar. This is absolutely going nowhere. I mean, it is completely stuck in the mud. No changes here. Same thing if we break. Although we're going to give it some more room here because of the impact once again at the release of the FOMC. 73.20 isn't going to do anything. So it's going to be 72.87, which was our support really for almost been a week and a half or so, maybe longer. And remember when we did the analysis, it was the beginning of the prior week. And I said, look, I'm not going to mess around with these levels. Are going to be just a little bit low, a little bit below 10 pips, that whatever. I go, we'll just look, I'm putting it to 72.87. There's a weekly level. And that's where it's going to go to whenever it gets there. Well, sure enough, it got there. We actually the market bottomed to 72.89. Then we saw a bounce from there, and we just since languished. So 72.87, and then the resistance is going to be the weekly level. We talked about that. We can expand this out a bit, and you can see the significance here of 74.27. We pull it back out. See that coming across the board. Look at that. So there's 74.27. We're looking here at a weekly chart, and you can see the significance of this. That will be our resistance to remain. Taking a look here at the dollar yen. We did break them here a little bit lower yesterday. That had a lot to do with what was happening in the indices. So we did go in and break lower. Are we going to push lower? Well, support, if we do move lower here, let's pull it back to the daily. If these indices come under pressure, I will put us around here. Let's just go with 927. 927 on the downside. Once again, we're pushing these levels a little bit further because it's, as I mentioned, with FOMC day, we're certainly getting the potential to see some bigger moves here. 927 and on the upside, how much further can we go on and push? That's asking a lot for it to turn around and jump all the way up to 1054. Although it could if the dollar really gets a plier under its tail. We'll just keep it simple and go right here. You know what? That's a little bit too close at 1028. So right there. This is where you push up, but this is where it'll probably initially find some resistance here, which would be 1040. 1040. Moving on to the cash dollar index. Well, same thing here. We saw the similar thing with the Aussie where we said, you know what, we're dropping to 72.20 and just going with the secondary level of 72.87. It's the same thing in the cash dollar index, 92.14 is going to be key. And I would think that that would hold overall, but we shall see. And on the upside, 93.26, obviously 52 would be key if we get some head of steam behind that, but 93.26, these are the two key areas right now for the cash dollar index. Let's go and move into the to Bitcoin. So we had quite the move yesterday in Bitcoin. We saw that pullback, and then this market just turned around and reasserted itself. So Bitcoin pulled back initially in the U.S. morning session before rebounding to close at 39,270. Resistance for Wednesday will be 41,085. We're supported 38,500. So kind of sitting here rather quietly. I don't think we're going to get much of a move, at least for a while. So 38,500. And on the upside, we're looking at 41,085. It's overall, I have to say, we're still bearish. If you look at this, yeah, we've had a move, but look, we're still languishing near these lows. But we're a long ways. I mean, you can't even say it's a range at this point. I guess if we break in here, and we kind of languish there, then we get switching from bearish to range, but it's still bearish overall. We're going to have to secure a weekly close above, this 39,270 before we can say, and actually really 40,000 before we can say, okay, we're out of the bearish mode. Let's now go on and move into the S&Ps. So the S&P futures saw their first sign of weakness on Tuesday before breaking 4,400 en route to 4368. You can see that clearly. The market rebounded to 43.92 before closing for the day. Resistance will be 44,002. We're supported 4368. You know, for a lot of people, the market is still going to be, the jury's out until we get past today and we see how we handle things with FOMC. So that's going to be, if we do go on and start to push lower, it's really going to open the door for quite the slide back. Although Nasdaq has already had a pretty good push, but For right now, these are the levels that we'll be looking at or focusing on post FOMC, and then you really have to open the door for this thing to move higher. If we were to move higher post FOMC, that would take us up here to 4407 for secondary resistance. 4407. Right now, we'll just focus on this 4402 for now. I guess we'll go and just leave it right there as it is. And let's go and move into the Nasdaq. So we saw this, and we actually pulled back. If you look on here, we pulled right back to the 20-day moving average. And obviously, this level was key here also yesterday, which is the 14,810. They defended it as we moved back up in here. We're pushing up a little bit higher right now. Actually, on our highs right now, for our current session where we're at right now. Resistance, as I told you before, is going to really give you this 15,003. With additional right here coming in right there. I guess we can go as far as 15,074. Support on the way back would be it's going to be 14,861. That's going to be the trigger point, because if it breaks below that, then you really got to look for them to really start to begin to press. So that's just going to be our key level there. Let's go and move into the gold market. No changes on the gold market. Now, I have just now gone and switched that as we spoke about moving this to the December. But you can see the December contract basically is trading the same thing as the August as far as where we're at. And we've kept this at 1808, and then on the downside, looking for potential move down to 1771, potentially, depending on how we go. And if we were to fall apart, but we haven't, then we can see this market fall all the way to 46. We can take a look at it since we have moved from August to December. If we still have that big movement here. It's still 71. So we'll stay with that, 71 and 46. Moving on to crude oil. So the crude oil is range trading between 71 and 72.50. You can see that right there. We can expand it a little bit. That's how I've been trading this for the last 2.5 days. We did see a little bit of more pronounced dip day and a half ago, but for the most part, we're just trading in this range. We do have crude oil data. We're going to keep it simple. It's still going to stay 72.53. If we jump beyond that, and if you take these stops out, that really does, if you think about this here, so here, this range we're in. And you're going to move that above. See, that just takes us down 73.83, and actually a little bit further, up to 74. So the point I was trying to make there is it's 72.53. You might jump above it. So if you look here, here's the wick here at 72.80. But the key thing is if we can close above 72.53 on a 2-hour close, then it does open the door for a move up to the 73.83. But for right now, it's going to be 72.53 on the on the upside, and then on the downside, we're looking at 71.41. We are seeing the Nasdaq continue to press up a little bit higher here. Once again, 15,003 is going to be a pretty key area here. And we'll take a look where we stand here with the profile. Well, you can see now this is full session. You can see the POC here, where the most trading was done, 15,102. Now let's go to full session. Not full session, I mean RTH. I really don't see anything until we get here at 15,016. If you look at the initial balance area here, that was 15,004, which is that coincides with or confluences with the 15,003 we were looking at. But this thing would probably push to 15,016. I'm not really seeing anything other than that, and 15,025 was a midpoint. So we probably want to push this to 15,016. Let's see what this looks like on our full session. I mean, look, this is all fingerprints down here as we fall. That suggests we could move up to at least 15,036. 15,036 would also confluence with the low of July 25th. So it really would be 15,037. Let's keep it simple here. Let's see, take a look at spoons. We're clipping a long hand spruce at 43.98. You can see the pop here from yesterday with its full sessions 4407. We talked about that 4407. I wasn't gonna. I thought 4402. I'll just push it up. But let's take a look at this on RTH. If you look at here, you see here, 4407 was a midpoint. Also 4407, not from yesterday, but from the day before, is also the high of the initial balance area here. You can see the first hour of cash trading. So that 4407 is pretty key. Look at that. So we're just going to adjust this to 4407. That would kind of work as a magnet for them to go towards. High volume here on that day. was 44, basically 44.01. But this 44.07 looks pretty key here. Multiple reasons. Move this back to full session. And once again, you can see the pop from yesterday. Well, not from yesterday, but from the day before, 44.07. So once again, that gives them like a target to go for. If we're able to push higher. And 44.2 is key, but if they do break above it, that gives them a target where they're going to run to. So here's the bias chart. And we'll get that posted. And thanks for joining us here on the European crossover.